The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to Trading Nadex Binary Options and Knockouts. I don't know if you were on there for a few moments beforehand, clearly having a couple of technical difficulties this morning. But we've got them all sorted out, and we should have a great session today and an interesting one in an interesting week with the volatility in the markets, with a lot of uncertainty still around the elections. It is creating opportunity in the trading markets. Today we are going to cover Nadex binary options and knockouts. My name is Todd Rich. I am head of education over at Nadex. And before I jump into the session, let me take care of a quick housekeeping item, and then we can have some fun today. And hopefully we can make this a little bit of an interactive session as well. First, I do have to put up this disclaimer. It is important that trading involves risk and may not be appropriate for everyone, and that any trading decisions you make are solely at your own responsibility and at your own risk. Lastly, I would very much like to point out that this is an educational session. This is education. I don't want you to construe anything I say today as a buy or sell recommendation. I'm doing this for your education purposes only. All right, with that, let's take a look at Oh, wait, before I jump over, I mentioned I want to make this a little bit of an interactive session as well. One, we're here to help you at Nadex. If you need some help, you have questions around the markets, the products, your account, please reach out to us, customerservice@nadex.com. I would recommend it. We try to be as responsive as we can. In fact, I'm going to show you another way that you can do that when we jump over to the platform and have a little bit of what I like to call an off-road session, where I show you some of the tools and how you can apply them in our markets. So one, we're here to help you. And one of the ways that we can help you is you're on this session. You came here, now we are going to record this. It will be available on our YouTube channel. I would recommend that you subscribe to our YouTube channel because we are constantly putting up fresh content. And if you are subscribed, you would get alerted when new content is posted. But you can follow us on our other social media feeds as well. But yes, if you're here live, you can ask questions. There is a questions box there on the platform, and if you type them in, odds are if you have a question, somebody else has it as well. I will do my best to answer them all. I may not get to them in the middle of the presentation because I might be on a roll, but I will certainly try to check in with those periodically, and for sure at the end, I'll take a peek. So please, if you have any questions as we go, do not hesitate to type something into the question box. All right, so our agenda for today. One, if you're brand new to us, and we have had a lot of new participants coming into our markets who are looking for these retail products with defined risk, defined reward, specifically binary options, knockouts, and even our call spread products. First, I'm going to define what binary options and knockouts are. I'm also going to put it out there that if you chat into the box that you would like a copy of this slide deck, I'd be more than happy to share it with you later or have someone from customer service send it to you, because we are going to go through a few slides. And if you want to review this later on the recording and play along again, either on YouTube or on our website, we post all of our upcoming webinars on our website, as well as an on-demand library of content. So there are resources available to you, but if you would like the slide deck, please let me know. But I am going to define binary options and knockouts. We are then going to jump over to the platform. And I find that these products I think they're intuitive when we look at the platform, but if you're looking at something new, it can always be a little intimidating. But once you see it, I can talk about these products, but when I show it to you, it makes a lot of sense. It will resonate, and you'll see how you could potentially participate in these markets. And we're going to go through some examples of binary options and knockouts. And again, no buy or sell recommendation, strictly for your education purposes only. So let's get into it. What are binary options? Let's walk through a definition of binary options, and I'm going to try to keep it high level and simple. But first, it is a short-term contract. When I say short-term, we'll go through that, but they can be as short as 5 minutes, 20 minutes, hourly, daily, or weekly. And they are defined risk, defined reward contracts. You know what your potential opportunity to make money or what your potential risk to lose money. You know those numbers upfront before you even place a trade. So very defined risk for people, particularly new people to the markets who are uncomfortable taking risk. They know up front what the worst case scenario is and what the best case scenario is. And what is a binary option? Excuse me. It's a statement. It's a prediction. Okay, you're making a prediction. We're building a product that's around a prediction, and that prediction has three components. What are those three components? One, it's an underlying market. At Nadex, we've got binary options on events. In fact, today is a perfect example because there's an event happening tomorrow, and I will show you. We've got them on stock indices, we've got them on foreign exchange pairs, and we've got them on commodities. And I'll give you some examples, but we got a variety of markets, underlying markets. So that's component number one. Component number two is a condition or a strike price, or it's often called a level. So you've got this prediction, will this market finish higher than this price? And then there's an expiration at this time. Sorry, I did not want to cough in your ear. So that is what it is. It's a short-term, defined risk, defined reward contract on a particular market with a particular condition within a certain time frame or at a certain time frame. And whether, as I mentioned up front, because we says defined risk reward, it doesn't matter whether you're buying it or selling it. And that is the interesting thing about Nadex binary option markets. Nadex is the only operating regulated binary options exchange in the United States. You have access potentially to offshore exchanges that might offer binary options, and they're not regulated, so I would say caveat emptor, buyer beware. But sometimes you can only buy them. Here at Nadex, you can buy or sell, and you've got a variety of choices. And a binary option will trade in a range, right? And you can think of it as a floor and a ceiling, but the range is it's going to trade somewhere between 0 and 100. Okay, as simple as that. Now let's talk about that 0 and 100. When we mention this as a prediction, it's a true or false statement. Either the event is going to occur or the event is not going to occur. Okay, that's why it's binary in nature. And in the end, all binary options will either go to one of two prices. It will either go to 100 if the statement is true. If the statement is true, the option will settle at 100, end. And if the statement is false, the option will settle at 0. Again, that is why it's binary. Now, it will trade in a range, okay? And it can trade, and the price will trade, and it will fluctuate up and down. But come that expiration time, it will be binary in nature. It will either go to 100 or it will go to 0 immediately. So now, what is that price that you're looking at when it's fluctuating between now and when expiration is? If I started a weekly contract on a Monday and it's not going to settle, or the expiration time isn't until Friday, you've got 5 days in there where the price of that particular binary option will fluctuate, and you can think of that price as generally reflecting the probability of the event occurring. So the statement being true, and that is determined by the marketplace. If there are more buyers and they drive the price up, then the price will go up. If there are more sellers, the price will go down. And the price that you're looking at is the probability that the statement will be true and the contract will settle at 100. So if you're looking at something that's potentially trading 70, the market is saying at that moment in time, this particular option has a 70% chance of being true and ultimately settling at 100. It also means there's a 30% chance of it being false and it would go to 0. And conversely, if something were trading at 30, the market is saying there's only a 30% chance that this will be true at expiration. And if it were true, it would go from 30 to 100. And if it were false, it would go from 30 to 0. All right, so that probability will change. It will fluctuate. And just like any other option that if you're familiar with listed options, say equity options on stocks, the price of the option, the marketplace is going to decide that, but the time until expiration and the volatility of the market will be factored into the probability of that event potentially being true. And so the prices that you see and the probabilities that you can trade will be impacted by both the volatility of the market. If it's moving all over the place, people are going to factor that in as I don't know where it's going to end. And so everything would tend towards a 50-50 option. And if it's stagnant and people feel much more confident because there's no volatility, the prices will be a little bit more defined because certain events occurring and certain events not occurring will potentially be a little bit more clear to the marketplace. And time is very large. And I will go through a very specific example. I'm going to look at a 5-minute binary option, and you'll see how as time clicks towards 0, when you're looking at a binary option, how quickly the probabilities of an event being true or false, or the contract either settling at 100 or 0, how quickly that will change. All right, that's enough on binary options, and we will get into it. And the interesting thing about our binary options, to make it even easier, is all of our binary option contracts are ultimately worth $100 or $0. So when you're actually trading those probabilities, you can actually think of it as dollars. So if you were to buy an option that was trading at 50, there's a 50% chance of that option going to 100. You would actually be risking $50 to potentially get $100. So you're risking 50 to make 50. If you were to buy an option that's 30, you would only risk $30, and it could potentially go to 100. So you're risking 30 to potentially make 70. And if you were to buy an option that's 70, you're risking $70 to potentially make 30. But there's a higher probability at that moment in time of that being true. You can also sell these, though, as I mentioned. If you see an option that's trading 70 and you go, there is no way, I think this thing is going to be false, and I really don't think this is going to be true, you can sell a $70 option. So you're risking, you sell it at a 70 option. The worst that can happen is it goes to 100. So you're only risking 30. There you're risking 30 to potentially make 70 if it were to be false. So you can buy or sell these. And the cool thing about our Nadex platform, whether you're buying or selling, we calculate all of your risk up front right on your order ticket, so you don't have to do the math. You can we do it for you, and you'll be able to see it. All right, next up. And again, as I go, if I say anything that's controversial or confusing, please type in a question. Now let's talk about knockouts. All right, knockouts to me are actually much more intuitive. A binary option, when you're talking about probabilities, people sometimes go, I'm not very strong with math, but when you actually look at it, you sort of understand it. It's not too complicated. Knockouts, on the other hand, are very straightforward. A knockout, okay, an Nadex knockout, is a contract that trades within a defined price range. We set a price range for a contract, and that price range, it also is going to have two prices. They're not 0 and 100. They're going to be something else, but those two prices, all right, one, again, the lower one is called the floor, and the higher one is called the ceiling. Okay, so you're going to have a range. Now, the contract itself, the price that you're trading, is the actual price of the underlying. So instead of trading the probability of whether something is going to be true or not, we call knockouts, or what are called delta 1 products. That's a financial industry term, meaning the price of that you're trading is the price of the underlying. So if you think a contract is going to go higher, you can simply buy it like any other market. I think the price of this is going up, I'm going to buy it. And you're trading up the underlying price. And if you think it's going down, you sell it. And you go, I think this is going lower. Now, some people get confused and they think, how can I sell something that I don't own? You're simply taking a short position. I think the price of this is going lower. All right, now the contract will trade between the floor and the ceiling. So when you get into it again, you have defined risk, defined reward. You know exactly what you could potentially make and what you could potentially lose before you place the trade. We calculate that for you on the order ticket. We try to make it as easy as we can. Now, what happens? How does a knockout settle? And a knockout will actually settle or expire or end, however you want to call it, in two different ways, either by price or by time. Now, let's first talk about price. We have the Nadex indicative index for that market, and we've got knockouts for indices, foreign exchange, commodities. Okay, so let's just, for example, pick gold, and I'm just picking one out of the air. If the price of gold, if you thought gold were going to go higher and you bought a Nadex knockout, right, it's got that floor and that ceiling. And if the price of the underlying touches either the floor or the ceiling, the contract immediately settles. It's over. You are knocked out of the trade. That's why they're called knockouts. So if you bought a gold contract because you thought gold was going higher and it touched the ceiling, boom, you would get knocked out, and you would get knocked out for maximum profit. You said, I thought gold was going to go up, and it hit your profit goal, the ceiling of your knockout range, and you made money. Conversely, if you bought that contract, I think gold's going to go up, but it went down, you were wrong. Whoops. Your risk was limited, and if it touches the floor, you would get knocked out of your trade for maximum loss. So what you can really think of this as, if you're buying or selling a Nadex knockout, because you can sell it. I think gold is going down. I don't believe this. I think gold's going lower. You can sell a gold contract hoping to profit if the price of it went down. And if it touched the floor, you would get knocked out for maximum profit. And if it touched the ceiling, oops, you were wrong. You sold it, but it went up. You'd get knocked out for maximum loss. Essentially what it is they're built-in profit goals and stop losses. Whether you're buying or you're selling, it's got a defined range around it where you would get knocked out of the trade, either knocked out for a profit if you were right or knocked out for a loss if you're wrong. That is why they're called knockouts, and it's great for new traders or traders that don't have a large quantity of money because it's defined risk reward, it doesn't require a lot of capital to get into the trade. And you know exactly what you could potentially make or lose, and that's it. Versus other markets where you have, if you go into the futures markets, you potentially have unlimited risk. Now you'd have unlimited profit potential as well, but it's very different. And if you're new and you're concerned and you're still learning, this is a great way to access these markets for the price action, but have guardrails around your trades. Now, the other way a knockout could settle is by time. What happens if you trade a knockout and you've got your floor and your ceiling and it fluctuates up and down in between the floor and the ceiling, but never touches it before expiration time? The price will settle. We will settle it on a Friday. All of our knockouts are weekly contracts. So over the course of the week, when that contract settles on a Friday, and your profit or loss then would be the difference between where you bought it or sold it and where it settles. So if you bought it and it went up, you'd have some type of partial profit up until your maximum profit if you got knocked out. If you bought it and it went down, you would have a partial loss all the way down to your maximum loss when you would get knocked out from, that would be your stop loss. So and it would be vice versa if you sold it. You would have a partial profit or partial gain up until your maximum profit or loss, because if it touches one of the boundaries, you're knocked out and it expired and it's settled early. So those are the two ways that a knockout can settle. Now, this is probably the biggest takeaway I can tell you about both binary options and knockouts. And this is a very important rule when trading them. I cannot emphasize this enough. If you take nothing else away from today, please take this away. And this is true when trading anything, but it's also true when you trade Nadex products, binary options, call spreads, or knockouts. Just because there's an expiration time associated with the contract does not mean you have to wait until then to see what happens. All right. You can choose to exit your position, to lock in profits or limit losses prior to expiration if you want to. So you do not have to wait. If you bought a binary option or you bought a knockout and it went your way and you made some part of a profit and you just want to say, hey, thank you, I'm going to take those profits and walk away, you don't have to keep risking it and wait for expiration and settlement to see what happens, because new information comes into the market. You redigest what's happening and your opinion might change. And that is the strongest thing you've got when trading anything, is your opinion. And if you've got an opinion and you think something's going up and you buy it and you're right, just because there's an expiration time or there's a maximum potential profit if you were to go to a limit, that's great. But at some point you might say, you know what? I think I'm going to take my risk off the table and walk away with some profits. Thank you very much. The same goes for limiting losses. If you trade a binary option or a knockout and it's going against you and you realize, you know what? I made a mistake. You don't have to wait and experience maximum potential loss. You can simply change your mind and unwind a position and just take it off and experience a partial loss, because a partial loss in circumstances would be better than a maximum loss. So, and that's something that you're going to have to figure out as a trader, is when do I want to let my profits run and when would I want to potentially just say thank you and walk away, or when would I want to limit my losses and not experience maximum potential loss in the event that you chose incorrectly. Okay, that is an important rule. Manage your risk. Sometimes it's great to limit your losses, and sometimes it's great to take partial profits and move on to the next trade. You've got to make that determination, but you do not have to wait until the end to see what happens. In fact, we find that many successful traders in Nadex markets do indeed unwind their positions before expiration, so there are no surprises. That's and as a trader, surprises generally aren't good. They can be, but it's always kind of, traders prefer the known versus the unknown, and you can control that by exiting your position early if you want. All right, before I jump over to the platform, and I think we're going to have a lot of fun on the platform and showing you how these products work on our platform, and even some of the tools that we've got to help you along your journey. But again, I want to point out, please email customer service at nadex.com. Please follow us on our social channels. I would highly recommend, I can't emphasize this one enough, go to YouTube. Go to YouTube, look up the Nadex channel and subscribe to it. If you haven't been there, we put out daily, a short 2-minute daily video from our Chief Commercial Officer, Travis McGee. Early in the morning, he gives a quick rundown, very quick rundown on what was transpiring in the markets in the evening and things that you might want to be paying attention to. And soon you're going to be getting a pre-cash market open, or it'll be before the 9:30 open in New York or the 8:30 Central, depending upon where you are, or earlier if you're out west, which is actually where I'm originally from. But we're going to be doing 15-minute analysis of looking at some of the markets and looking at some of the levels and showing you where you might want to be taking a peek. So our YouTube channel is a great resource. I would recommend subscribing to it. And as everyone does, they consume content on their own time frame. I know I don't watch any live TV. If I want to watch something, I'm catching it on demand at my leisure. If you want to binge watch some Nadex educational content, it is there for you to consume. So I would recommend that. It's definitely useful. So now let's go ahead and jump over to our platform. Let's have a little fun. What I'm going to bring up right now. And again, as we go, if you've got questions, please type them in. I'll do my best to answer them. What do I need to go to? Yeah, let's do this. Yeah, this is what I want. All right, I want, I was having some technical difficulties. We've got all sorts of GoToWebinar things having a challenge. Before I jump over to the platform and log in, I would like to point out one, in the learning section. One, you can go to our webinar section and you'll see what is coming up. And we've got an interesting, I wish I had it in front of me right now, but you know what? Next week, you're going to catch it. We're going to be running a demo trading challenge with real money for the winners. So keep your eyes open for that and definitely come back here next week, or you can go and register for these sessions now. We're going to be doing a series on the platform and our products, and it will tee you up to prepare for the Nadex demo trading challenge, which is the following week. Costs nothing to enter. Play along. But I would recommend that you take a peek out here and see what we've got. Come join us. This is also where you'll find our archive of on-demand content. And if you wanted to review any of these sessions, you can just watch them from here. But again, subscribe to the YouTube channel. So, and I am getting a question, and it is good. What if you're outside the United States? And people can. There are limits and restrictions on who can participate in Nadex. Email customer service at nadex.com. Please reach out to them. They'll tell you right from outside the U.S. who can and who can't. So please email customer service at nadex.com to get the specifics on where you can and cannot participate in Nadex markets from. Okay. Now what I really want to do is I want to log in and jump into our platform. If you've never seen our platform before, and in fact, I want to do this too. And that's not what I want to do. I'm making it darker for myself. Give me a second here because I want to make sure you've got enough screen real estate. I would really like to. There we go. Make it bigger. Make it easier for you to see. Because I know when we're delivering these over the internet, sometimes it's a little tricky. All right, you'll notice that just quickly, our platform is broken into 3 sections, and these little blue lines can hide them. We have our markets section on the left. We have what I'll call our dashboard in the center, and then your positions at the bottom. We'll get to all of these, but let's start with binary options. And I want to make sure I'm making everything as big as I can so you can follow along. Number 1, in binary options, I mentioned we have indices, foreign exchange, events, commodities, and then we've got these other shorter term duration contracts. These 5-minute ones, we will go through an example, and you're going to watch how dynamic the prices can be. Before I jump over to that, because that's probably where I'm going to go next, I did want to point out we do have these event contracts. Tomorrow, the U.S. is going to be announcing our non-farm payrolls. Are we adding jobs to the economy? And these prices aren't going to move too much, but you can see the number currently 600,000 is what the economists are predicting. If you think the U.S. is going to be adding more jobs, there is an opportunity here for you to potentially buy one of these contracts. And if you were to buy one, it would tell you your risk reward over here. And if the economy is performing better, you could potentially make money. If you think the economists are wrong, these guys are nuts, you can sell a contract and you can see the different levels that you can choose from. All right, and the different levels are going to have different probabilities and different risk reward profiles. Not only that, but we've also got in our events, what's the unemployment rate going to look like in the United States? And right now, the economists are calling it right around 7.6%. Actually, a little bit. So you can see the probabilities changing. Is our unemployment rate going to be higher or lower? You can make a prediction. But what I would like to do here, because it's only well, let's give it a shot. There's 3 minutes to go. Let's look at the euro US dollar. Actually, you know what? Let's pick one that is, it looks like they're all moving pretty quickly. The euro yen. Let's just see what happens here. There we go. All right, the euro yen. And the reason I did that is I want to see different strike prices on the chart. And I want you to be able to see how the probabilities are going to change. Now, this contract is going to end in 2 minutes and 26 seconds. And you can see the price currently of the euro yen is just above this one strike price, this 122.43. And you can see the price for these. And when I click, if I wanted to buy this, it shows me where it would need to settle in the blue for this to go to 100. As this ticks higher, you're actually watching, because the time is ticking down and this is ticking up, you're watching this move closer and closer to 100. Now, if this keeps going, this 112.48 could get kind of interesting. Now, granted, there's only 1 minute and 50 seconds to go. Oh, and we started ticking away from it. And notice how quickly this collapsed. And by the way, if I think it's going to keep going lower, let's just sell one. And I just wanted to sell one just for the fun of it. I don't know, not a buy or sell recommendation. I actually sold one and now it's ticking back up. I don't know if I'm going to be right or wrong. When I sold that at 66.25, I knew that I could make, if it went to 0, I could potentially make 66.25. If it goes to 100, I would lose 33.75. These move quickly. These probabilities change dramatically as the time ticks on, because I've only got another 1 minute and 4 seconds to be right. And it looks like I was wrong. Now, if I feel like I was definitely wrong and I wanted to buy this back and just save myself a few extra bucks, I could just buy it back and be done. Or it'll settle at 100 and I'll have experienced maximum loss. Now, what you will see is as we get down to about 25 seconds to go, you're going to watch everything go blank, including this one. I mean, it's actually saying this is pretty much a foregone conclusion. This is going to go, and now I just told you they would go blank. Why is that? Why, with 25 seconds to go, would nobody want to trade these? And the answer is, I don't know what's going to happen. In the last 10 seconds, I sold one of these, and we can see at my position, I sold it, and it looks like I was wrong. 6 seconds, only a few more seconds, and 1 second, it just expired, and that's going to settle at 100. My position's gone. I experienced maximum potential loss. Okay, I was wrong, but it was again, it wasn't a buy or sell recommendation. That was the euro yen. I just want to kind of pop it back up again because we'll reset these contracts immediately, and you'll start on we'll start on another one of these 5-minute ranges where here we've got 4.5 minutes to go, and you see now. Let me get rid of this so we can see a little bit more. It's just below this 122.46 level, and it's trading right around 50.50. What is going to happen in the next 4 minutes and 15 seconds? And notice the ones that are further away, much lower probability. This one, almost 100% probability. And the reason you're seeing these is because it's not making a lot of volatile moves right now. But if we look back a couple hours ago, it certainly did. So it's just a matter of what time of day. Let's just bring this chart in. You can see there were times of the day where the euro yen were in fact quite volatile, but now not so much. So a lot of these, it's depending upon what's going on in the euro, uh, yen time zone, who's watching those markets, and what could potentially change. So you're not seeing as much dramatic volatility right now. But hopefully you can see how, if I don't think it's going to get up to here, I don't think this is going to happen. I could try this again, and I could try to make some money back by selling this one. Again, not a buy or sell recommendation. I tried to sell one at 18. Did I? Oh, I actually did sell it at 18. Okay, so it was at first it was in my order section, and then I sold it at 18 and a half. In fact, this is going to be kind of fun. In fact, I'm going to say, let's watch what happens. I need it to finish in this red zone for me to make my $18.50. If it settles above that, I'll lose. When I sold it at 18 and a half, or I think I sold it at 18 and a half. Oop, let's just show you what it. Well, look, when I sold this 18 and a half, the most I can make is 18 and a half, but I could lose 81.50. Now, if I want to just say I'll take it off, there's still 2 minutes to go. If I wanted to buy this back and let's just say I wanted to buy it back before I sold it for 18 and a half, I'll buy it back for 8 and a half. I just want to make $10. I can place a bid. There's my bid. Oh, and I did. I took it off. I don't know what's going to happen in the next minute and 52 seconds. This could have gone right back up, and this would have gone to 100. I don't know. It seems to be ticking down, but you've got to make that determination yourself. For me, I lost money on my first trade, but then I made $10 on my second trade. So what did I lose? I lost $34 on my first. I made 10 on my second. So just while I'm sitting here, I lost $24 net. Again, not buy or sell recommendation. I just wanted to show you how binary options can be rather volatile as you get to expiration, which is why a lot of people will close their positions before expiration. Now, again, this is the 5-minute binary options. You won't necessarily see that dramatic of a move. And like, let's just take a look at gold today. I'm kind of curious because gold really sold off and then has rallied, I believe. Yeah. You could take a look at the markets. Now, I do want to show you a couple of tools that we've got available. How do you want to look at these markets? On our charts, and we've got tutorials on the charts, but let's just say I want to know what gold has done over the week, and I want to see it in 2 hours. Let's go to 4 hours, and just because it'll give me. You can see how gold has been really rather quite volatile as of late. Okay, I got my time, and let's actually. And you can customize your charts. There we go. I mean, you could see gold was clearly in a downtrend, and as of late, in fact, here, let me show you some tools. What am I looking at when I say I see a downtrend? I'm just going to draw a trend line in. It's been in there's this downtrend that was in, but more recently, as people digest some of the news on what's going on with the election, we're seeing this more of an uptrend here. So what is it that you want to look at? Not only trend lines, but let's say you want to look at channels. I'm just going to do a channel here and if you're not familiar with channels, it's similar to trend lines. Actually, I'm going to have to customize this a little bit. And you can adjust these afterwards and move them around so that they really fit what you're looking for. but here's a little channel for gold recently on the upside. If you wanted to do it on the downside, you could as well. Or Fibonacci. These are kind of nice. I mean, people, if you're not familiar with Fibonacci, let's go ahead and I'm going to remove all of my drawings and let's do Fibonacci. It's a ratio that's seen. Now, here's what's kind of nice. If you're not sure what Fibonacci is, I can hover over the eye and it gives me some education in platform education, where it gives you key levels. And Fibonacci ratio is something that's seen in nature. It's seen in architecture. It's seen in the human body. People tend to look for these patterns in the market. The way I would do a Fibonacci retracement, it's as easy as 1, 2, 3. If it was in a downtrend, I pick my upper left. I go to the bottom of the trend, the lower right, and then I'm going to extend it out. And it gives you these ratios, these retracement ratios. And in fact, you can actually see this first 76.4 level was a level that met resistance. And in fact, this level down here at 50 was actually even lower right here, the 38.2 support down here. Once it broke the support, it then became a resistance level. That same level was resistance. Resistance. So you tend to see how it moves between, and it's incredible how here's the upper end of a range, and here's the, you can see with the lower end how it ends up support in here, where it creates opportunities for you to potentially make a buy or sell recommendation if you think it's going to hold a level and it's going to revert, or if it's going to break through a level and break out. So a little bit of fun. There are a lot of different tools. And by the way, and I've got what products do we have? And I do want to, in fact, and I know what we're going on, and I want to get into knockouts. I do want to get over to knockouts. But in binary options, we've got indices, foreign exchange. I mentioned the events and commodities. In call spreads, indices, foreign exchange, commodities. Knockouts, indices, foreign exchange, and commodities. Now, let's talk about indices. What are those indices? For our binary options, interestingly enough, we've got global indices. If you're looking and you're interested in trading the UK market with the FTSE, we've got binary options around it. If Germany, the DAX, the Nikkei in Japan. So we've got a variety. They're all indices, not individual stocks, but these all trade around and they settle to the future for those indices. Okay, that they all settle to the future of those indices. Now, in knockouts, which is what a lot of people are looking at, let's take a look at our indices. We have the 4 main indices in the United States. The US 500, which settles to the S&P 500. There's the small cap 2000, which is the Russell 2000. If you're not familiar with the Russell set of indexes, they've got the Russell 1000, which is the top 1000 stocks in the United States. It has the same 500 that are in the S&P 500, but then it has the next 500. Small cap are the 2000 beneath that. The US Tech 100 is the Nasdaq. You're looking at, so if you really like looking at these tech companies, you're big into the Facebooks, Amazons, Googles, Netflix, Apple, right? Those are all in the Nasdaq, and that's the US Tech 100, and those are the movers of that. And then the Wall Street 30 is the Dow Jones Industrial Average. Okay, so we do have access, but it's all around indices, not individual stocks. Let's just take a look at the S&P 500 for fun, and this is where I'm going to do my knockout examples. And I'm just going to pick any knockout. It doesn't matter which one I pick because on our charts, we make it easy for you. You can see I've actually drawn Fibonacci on here at some point. Let's get rid of that. Let's delete all drawings. Let's take a look at a day. And let's look at 30 minutes. We've seen, and let's zoom this in to, I'm looking at the bottom. Today is Thursday, so let's, I could probably even make this a little, shorter. Let's give us, 1 minute. Now I'm going to have to back up. Okay, there. So again, you can customize your charts any way that you like. They're all up. All the controls are up here for your date range, your interval for your bars, all of the different. We have technical indicators. If you're not familiar with any of these, Bollinger Bands, any of these technical, moving average, convergence, divergence. Again, if you're not familiar, all right. We've got in-platform education to help you understand these some. We've got all our drawing tools where I started to use some of them like Fibonacci, horizontal lines, trend lines, channels, even if you want to find your own support and resistance levels, you can put a horizontal line where you tend to see some price action. So it's all customizable. Now, with a knockout, there are always going to be 4 knockouts for each contract. So if I wanted to trade the S&P 500, and you can see that it's been drifting higher, let's go ahead and put our Fibonacci in. I like to do that in an uptrend Fibonacci retracement. The way I would do this is I would start at the bottom, all right, because we're in an uptrend, and then that's one. Number 2 is the top, so that's click 2. And then click 3 is I'm going to extend it all the way out here. And it gives you some ideas on where you might want to, where you could potentially, and you can see again, it kind of holds true. These levels, it tends to trade in these ranges until it breaks out of them. I mean, this is a perfect example right here where resistance, 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 resistance. It came down, it found some support at this level, and then it broke this level and actually went down to the next level. Now, when that happens, it came back up, and that previous level, which was support, was now resistance. It resisted it once, it resisted it twice, and then it broke down. All right, it broke down and started hovering around this 76.4 level. So it can help you. Again, you've got to make a determination. Now, if I thought this were going to continue, and we're going to continue to see a rally in the S&P, I've got my knockouts, and you've got to choose which knockout makes the most sense for you. And you can switch between the Nadex knockout contracts by clicking on the blue lines on the left of your chart. Notice how it will give me my ceiling price and my floor price very cleanly, very clearly, very easily as I click around. Now, for instance, if I thought the S&P 500, and this will settle tomorrow, 1 day and 2 hours, if it were going to continue to go higher, all right, this might be the one I would want to buy. Now, why would that be the one? Because it's got the closest floor. What happens if I bought one of these contracts? If I bought one of these contracts, and let's just use the middle price, 35.0850. Let's just pick something between the market. And you can, let's put the valid price in. All right, I'm picking a price that's right in between. And again, not a buy or sell recommendation. If I were to buy one here, I know I could not lose any more than $115, and I could potentially make $385. Now, how would that happen? This has got that floor and ceiling. The floor is $34.97. You see it right here on the chart. My ceiling is $35.47. If I bought this and it went down and touched $34.97, I would get knocked out and I would experience maximum loss at $115. If I bought it and it went up and touched $35.47, I would get knocked out and experience maximum profit of $385. Now, if I bought this and it went up and settled somewhere in here, I would have a partial profit up until maximum profit where I would get knocked out. And if it went down, I would have a partial loss, right, until it hit $34.97, at which point I'd get knocked out for maximum loss. Now, let's say, for instance, hey, I don't think it's going to go higher. Maybe I think it's going to go lower. I might want to choose a different knockout. All right, so here I might want to choose this knockout. Okay, now why would I want to choose this one with the 35.17 ceiling and a 34? And maybe this is too close. I know that this level up here for Fibonacci is 35.22. This might, if I were to sell this right here at 35.09, let's put that. Let's just make it a nice even number. And again, I'm trying to keep it real with what the prices are up here. If I sold this at 35.09 and it went up and touched 35.17, boom, I'm knocked out. I lose $80. All right. I was selling it, it went up. Now, if I thought if it made it all the way down here, I could potentially make 420. Now, this might be playing a little too close with fire because I know that there's this chance that it could come up to this 35.22 level, which we've seen is a level on Fibonacci. Maybe I would want to choose a different knockout. Here's one where I'm above that 35.22 level. My ceiling is all the way up at 35.27. Now, if I were to sell one of these at 35.09, or here, look at it, it's already going 35.0850. Let's do that again. Let's just put it in between. Oh, there, it's 35.09. Let's make it 35.09. Okay. If I were to sell one up at 35.09 and now it went up, I sold it and it went up, oops, it hits 35.27, I get knocked out, I lose $180. Now I'm potentially risking $180, but my profit would only be potentially $320 because my floor is now higher. On our Nadex knockouts, they are 50 points wide, and the contract itself is worth a total of $500. That is true, I believe, for almost all of our knockouts. I believe they're actually not all of them. You got to take a look. Some are 500. I think there's a couple that are 400, and I think the Nasdaq is even a $600 range. And that's going to be because, so let's just take a look. I can't remember. What is the Nasdaq range? Yeah, the Nasdaq is 600. Okay, so and if you were trading the Nasdaq, you could you could take a look and decide, hey, do I think it's going higher? Do I think it's going lower? Whoops, I clicked off of it. I didn't mean to do that. There we go. And I just wanted to see that you can pick which knockout range suits your trade the best. Okay, and that's how knockouts work. They are Delta One products. You are actually trading, and if you notice, the indicative price that you're trading, it's also on the chart, and the prices where you can buy and sell, these are always going to be or usually be right around the indicative price. So hopefully, I did go a little long today, but I wanted you to understand the difference between binary options where you are trading a probability, and it's 0 or 100 and it's a $100 contract, or knockouts where you're actually trading the price of the underlying, right? You're trading the price of the underlying, and you've got distinct knockout levels around where you would get knocked out of the trade if you were right, or where you would get knocked out of the trade if you were wrong. All right, the last thing I want to mention again, I'm having, yeah, there it goes. Email us. Any questions? Email us at customerservice@nadex.com. We're here to help. I want to encourage you again, follow us on YouTube. Check out what we've got in our learning section and our webinar section of our website. Please join us next week. Pay attention. We have a free demo trading competition coming. In fact, I think it's you can start signing up for it now. There are there are real prizes for the winners. It should be fun. It's an opportunity for you to play in Nadex markets in a risk-free demo environment and have a little bit of a competition with other folks. And the winners will walk away with cash. With that, I want to thank you all for joining me today, and I want to wish you all good luck in the markets.